Coming up in the show, I'm going to bring you my opening comments on the markets. I'm also going to bring you a review of gold, and much higher prices are likely ahead. Katie has trade planning with options. She's going to be applying our charting method with option strategies in XLE. And I'm going to reveal Day Trader 2.0. Do not miss this special for active traders. You're going to see our new amazing Day Trader cockpit. And also, you'll see my analysis of the stock market as I'm going to do multiple time frame analysis in SPY and let you know how you will know when a correction is starting.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market was narrowly mixed last week, overcoming big Tuesday sell-off. It was an early battle of the tech giants, Tesla and Apple moving down very significantly. Tesla price cuts and China sales really falling off, and Apple also struggling in China. And they got a $2 billion fine from Europe over their streaming music apps, and there's been a lot of sellers in Apple, and our analysis has been all over that on the negative side. But the other side of that was SMCI, and that soared over 25%, and that added to the S&P 500 strength to the upside and really helped Russell, despite problems again in the small banks. SMCI, by the way, is over 75% of the Russell gains for the whole year so far. So that's really a significant player in the Russell. Powell's semi-annual testimony before Congress was mostly seen as positive. He talks about strong growth, but saying that they are still data dependent. So on Wednesday, this was a 2-day testimony, Wednesday he said that we won't be cutting too soon. We're really data dependent. And on Thursday he said, we're not far from having the confidence we need that we're making the 2% inflation rate that we need to start actually removing the restrictions that we have in the interest rates. So conflicting information. And any way you looked at it, buyers loved it because they're looking for excuses to buy all the time. Investors, they pushed markets up 47 points in the S&P 500 on Thursday. And also the semiconductors moved strongly to the upside as Micron was upgraded, and that pushed the NASDAQ up on Thursday 280 points. Strong day Thursday. Friday, the unemployment numbers were really mixed. The payrolls, well, they were stronger than estimates, but then the revisions removed that. Unemployment rate moved up to 3.9%, up 0.2, and wage growth slowed, and the indexes loved that. They moved up again early in the day, but you got to say, can you really trust these numbers? Because these revisions have been amazing. Anyway, it seems like the buyers are tired and they're not sure what numbers to trust. Even though Apple managed to get a bounce here on Friday and the semiconductors were moving up again, well, that seemed to reverse as sellers came into the market as, it seems to me, stratospheric. And they really overcame in the early rally today on Friday what was some very disappointing numbers out of Costco, as their earnings were softer than expected, and the stock moving down now here at midday about 7.5%. So retail having a bad time of it. And you got to wonder when you see some of the reports about the amount of credit card debt that's out there and the percentage of total debt that's credit card debt. Well, it's 100%. And that means that the buyers out there for retail are strapped. Also, we saw Bitcoin move over the $70,000 number, just absolutely mind-boggling in my opinion, and then backed off some, trading now about 68,800, but still way stronger than we gave it credit for. So the stock market continues to soar, making all-time highs. The movement went well beyond our upside projections. However, our indicators have been consistently positive, and we've been saying all along that it was not time to short this market. While that all remains positive, and indexes have been strong, other than a little bit of reversals that have not held, they have gotten up to important levels of resistance, and you have to think about valuations, where they're trading up near 190% of GDP, and that is historic. And often when levels get to crazy valuations that we have seen over the decades, well, that's not very often, then the markets reverse. And added to that, there is one negative sign right now that I see, and that is money is flowing out of tech funds. Bank of America reported that for the first time in 9 weeks, there were money outflows of tech funds. And the amount of money that came out in the last week of technology funds was $4.4 billion. That's a huge amount of money. In fact, it's actually a record. So money is actually flowing out of these tech stocks, and we see that in the stocks that have been moving down in that category and the ones that are really looking toppy right now. Now, that could mean a rotation in the market, but weak techs have become very obvious, and only the semiconductors have been the ones that are moving the market up, and that is some really narrowing leadership that we have in there. And if the money is flowing out of those high-cap techs, that's really going to weigh on the indexes, even if there is a rotation going on. And that's what could bring the correction that we expect to see in April and May, which really could be an owie. Did I say owie? Stocks for the week, well, we'll call them mixed. Small gains in the S&P 500 and the Russell, and some small losses in the NASDAQ and the Dow. Those losses are increasing a bit right now, here at midday on Friday. Bonds 30s gain about 1.5 and 10-year yields fall by 9 basis points. And here's a bold call. I've been making some of those lately. I think we've seen the high for the year in interest rates, and we're going to see a strong bond market rally, and that's a good-sized pullback in interest rates. And that could all coincide, which normally does, with a big decline in the stock market. Gold, just amazing, and I'm going to bring you my analysis a review of that right now. It gains $90 on the week, silver up over $1 on the week, and all of the metals have turned much better, and they're likely much higher prices. Don't miss what I'm going to tell you as I show you the analysis coming up. Dollar loses about 1%. This is based on the strong yen. In Japan, rates are going up. Their economy is strengthening. Inflation is strengthening there. And yield curve control could be over. So that strong yen and also a strengthening euro is starting to weigh on the dollar. And we expect that the dollar would move down back to about par. That's 100 in the dollar index in coming months. Oil market down about 215, and right now oil is looking to us like it will move down to near $75, now trading around $78. So that's the opening for the week. I want you to go to askSlim.com, get acquainted, sign up for free using our sign up for the SIR Lite. You're going to get our information on the stock market every single day. On YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up. On X, follow me at askSlim. And any questions you have on all of the stuff that we're going to bring you in this video, memberships, our huge offerings of education and analysis, write to Matt at askSlim.com. You've got to watch this. We're going to look at gold, which has made strong gains to an all-time high. Question is, now what? Every week when I do my chart updates, I include with that what's called the most notables, and I look at 24 different futures contracts, do that analysis, then hand that off to RV to review, and then he does the Future Speak show with that analysis. This was the most notables that I put out for metals a week ago when I had updated our charts, which I do basically every Monday. I said metals rose sharply at the end of the week, as shown in the Market Week show on Friday. Yes, I brought that last Friday. And the action clarified a shift in the gold cycles, which has put it into a window of time that could bring sharp upward moves. The same is for silver, which could be making an early intermediate trough. The monthly patterns have shown the sharp upward potential for gold this year, with targets of 2,200 and a potential to get over 2,300. The nature of these pattern changes, what we believe would be a second-half story for 24, really has changed. It could happen now, as momentum is improving in both contracts, and cycle shapes look quite positive overall. And here is a big statement. Metals could be the best trade out there right now. So that's what I said a week ago as I showed that in the Market Week show. And now let's take a look at some other important information before I get into my charts. This was posted last week. The source is Bloomberg from Tavi Costa and Crescat Capital. And this is a look back to 1970 all the way to present time. And he's showing what he calls the first gold cycle, the second gold cycle. And now as we move toward past that other high that we made in the previous cycle, which was right around the 2100 and change area, now moving into what he calls gold cycle 3. And he gives this important list right over here of what he believes are the reasons that gold can go significantly higher. And this is in log scale, so he has it pointing up here to 9,000, 10,000, wherever it could potentially go. Of course, we were only looking for about 2,300 or a little higher this year, but now that could even be higher, and I'll show you that when we look at our charts. Here's the reasons that he puts in here, and a lot of these make just a lot of sense to me. Falling gold production, central bank accumulation, there's tons of that. Government debt at historical levels, unattainable high fiscal deficits, the gold to S&P 500 ratio near all-time lows, G7 economics moving into a period of manufacturing revitalization. Very interesting there. That would be stimulative. Rising globalization trends, the onset of inflationary regime, and whether we have President Biden continuing or President Trump stepping back in. They were both inflationary in their actions. 60/40s, which performed very poorly in the last few years, a little better this year, looking for haven alternatives, lack of new gold discoveries, ultra capital conservatives by major mining companies. That means their costs are going way down. And trifecta of macro imbalances with the debt problems that are similar to that of the 1940s, inflationary issues that look like the 1970s, and asset valuations and imbalances that look like the 1920s and 1990s. And I think he's right about that, giving a lot of great reasons. And I'll give you one more reason, and that is the crypto markets are going absolutely crazy. I have believed that there has been very little utilization for them, and it's mostly a gambling, a way to gamble in the markets, and they're certainly gambling and winning right now. But that time is going to stop, and a lot of that money, when it realizes it's in trouble, is very likely to move into these markets, into the metals markets. All of the metals at this time are firming up and looking much better. Copper looking much better. Platinum making an important bottom. Silver looking much better. I'm just going to show you gold right now because that's what we're talking about. But I thought this was really important to bring. You know, my projections of getting over 3,000 are really conservative when you look at this chart. Let's take a look now as we look at my cycle analysis and projections, which, as I said last week, had been updated. This is my gold charts on the left weekly, on the right daily, and I'll blow these up for you to see. And based on the changes that happened in here, now you see the minor cycle right in here. Now with that, I was looking for that to take a little bit more time and then move up, but we have tightened it up a little bit based on the market telling us to do so. It made this triangular formation, so there was a little shift in there. We upgraded it on 3.1. We upgraded it again on 3.6. And now you can see in here, as we are in this rising phase of this minor cycle with the dominant cycle pushing up right in here, that then tells us that there is lots more upside potential. When the ideal peak is shown and this rolls over, that doesn't mean the market's going to move down. That simply means that it's reached past the midpoint of this cycle, of the ideal cycle, and it would take the market telling us that it had turned down. So in this case, you could see this rising cycle right there, and this one over here could bring even strong gains again, looking out into the summertime, which is what we really thought was going to happen. But now things have changed. And you can see on here on the weekly charts, we've moved over some very key monthly numbers right in here, and these are the major monthly fib extensions. That's way out over here at about 23.30. That was about the peak of where we saw we could get this year, but now it's really projecting higher to go out over here into the 24s or 2500s in this year. So this is a improved picture. This is quite bullish when we look at this and early in this rising phase. Now, you could say, well, it's just going to turn down from here because it hit this important area here. That's the 78.6%. This is the 100% based on this cycle right in here. And that takes us up to that 2300. It's 2290 to 2330 right over there. That looks like the reasonable target for this year, with a lot of possibility that it goes higher. When I say that this could correct in here, why does it have to go any further? Here, when I look at the daily chart, it gives you some great information, because when I look at this cycle right in here, that's what we're going to look at right there. You can see this minor cycle there, which is calling for some kind of a correction in here. And you see this one was a little late, so this might shift over just a little bit. But this is looking for just a few days of pullback in here, and then moving up again in this next cycle. That does not allow, going back to the weekly, for any kind of a pullback, because the probabilities are high that this is still going to move sharply to the upside. Now, see this yellow zone here? Each of those yellow zones normally brings pretty good corrective periods, as you can see in all of these cycles. All those pullbacks, when both of these cycles have corrections pointing to them, that is money flowing out in a corrective way. Well, you can see that shows up somewhere out over here, maybe out in April, for a bit of a pullback in here, and then moving up again. So that shows you that the market is likely to be moving up again and again. So lots of reasons to believe that gold is going to go much higher when we see this analysis in here. And yes, when we look at the chart right over here that says, well, it could go much higher, our analysis is showing that that is very likely. Pullbacks in gold and pullbacks in the metal markets, I believe, are buying opportunities. That's our revisiting of the gold analysis. And thanks for watching that. Trade planning with options, Katie's got it for you. You're going to see great analysis in XLE.
Hi, this is Katie with askSlim. This is Trade Planning with Options on March 7th, 2024. Today we're going to look at an options trade idea in the energy sector ETF, XLE. First, we have our legal disclaimer. The options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. Let's get started. We're going to start by taking a look at the weekly chart of XLE. On the bottom here, we have this dominant 39-bar cycle that is broken into minor thirds. Now we are in the rising phase of the dominant cycle, and we have positive momentum with a green reversal scout. That is our proprietary momentum indicator. XLE has been trading this week at the top of this resistance zone, so it will be important to be able to get through that level. Our next target after that is the intermediate 78.6% fib at about 90.5. Now let's go and switch over to the daily chart. Here we have a 26-bar cycle, and we are also in the rising phase of this cycle. The prior cycle formed its low right here after basically this sort of sideways consolidation. Now, momentum remained positive through that consolidation and continues to remain positive with both the reversal scout and the slim ribbon. I have put the intermediate resistance levels on this daily chart. As I mentioned, XLE has been trading right up at that 61.8% fib. So what we're looking for is a small pullback into the slim ribbon, similar to what happened right here. Our entry range would be this support zone between 87.22 on the top and 86.50 on the bottom. Now, if XLE continues to make higher daily cycle highs, then this support zone will rise too. But those are the levels right now, and getting below this level of 86.50 would invalidate the trade idea. So then we're looking for a push back up to at least this 61.8% fib at 88.07, up to this area around the short-term 50% extension, right around 89.25 to 89.35. Now notice at the bottom of this flag right here that we also got a signal on the slim ribbon PO, both here and on the 2-hour chart. So we're looking for that type of signal again. Now we're going to go over to the Tasty Trade platform and look at option strategies. But first, go to the askSlim homepage, hover over the Marketing Partners tab, and click on Tasty Trade. That will take you to this page where you can learn more about them. And if you decide to open an account with them through our link here, that will help you with a special bonus, and it also helps us. Okay, here's Tasty Trade with XLE loaded in. Notice the IV rank is only 2.8. That is very low, and that suggests long premium strategies that would benefit from a pop in implied volatility. Now, in terms of which expiration cycle to use, I would be inclined to look at this March 28th quarterly expiration cycle. And the reason for that is because this is a short-term trade idea that is looking for one more upside push before we get much into the declining phase of the daily cycle. So opening up that expiration cycle, I am noticing that the calls are relatively inexpensive. Now, we don't have our entry signal yet, but if we did, I would be looking right around that 70 delta. So that would be this 86 call. The market just closed, and this is the markets are wide in here right now. So this is showing that we'd have to pay a debit of 170. When I was looking at it earlier, it was right around 250. So whatever price we got filled at, that would be our max loss, and max profit is unlimited. So we're going to keep an eye on XLE for a small pullback into the support zone, and I will post in the Option Strategies Discord channel when we activate this trade idea. You can also check that or the Options Trade Idea tracking spreadsheet for the appropriate strike at the time that we get our entry signal. That's our options trade idea today. As always, feel free to reach out on Discord or via email to katie@askSlim.com if you have questions or feedback.
Stock market analysis and projections on the S&P 500. First, some important information. Please do take some time to read this slide. This is about our approach to analysis and what it means when you use it, especially the concept of you taking trade ownership. Make sure you read this slide. This is something you must see if you are an active trader in the markets. Announcing the askSlim Day Trader Service 2.0, Launch date 3/11/24. And this is the most amazing collection of custom tools that I have ever seen for active traders. Amazing resources. In 50 years trading, I have never seen anything like this. Our team has been building this for 6 months, and you're going to see something that is incredible. On the left, you can see the impulse monitor. What this tells you, looking here, and this is set up for 4 of the indexes that everybody trades, what the conditions are of the market. So it's green, yellow, or red. And in this case, you're seeing all green, so the market is in strong conditions. That means that there is upside energy in the market, and it is likely to continue to the upside because of the inertia that's in the market, the energy that's in the market, and notifications that you can see based on when these things change. This one in the middle is my favorite strategy. It's the 8-minute strategy, and what you get here is our strategy conditions right here. So you can see when they're green, you have a strategy condition that is likely trade on, and when it's yellow, there's no trade, and when it's red, it's trade on the downside. And these are the different aspects, the inputs in that strategy. And when they're all in alignment, then these signals go on, and it really tells you when it's trade on in the 8-minute strategy. Also, add to that Matt's intraday price zone roadmap. This is support resistances, and it gives you a great sense of bias in the individual indexes. So it's S&P 500, NASDAQ, and the Russell, and you have our support and resistance zones, and the yellows areas are the acceleration zones, and that tells you where it's likely to keep accelerating through that area or to find support or resistance. As you could see, support being found right over here on the down day. And in the yellow zones, when it gets in there, it's pretty likely it's going to move all the way through it. So you can see, and when things are changing, then you get our reversal scout in there. And there are 2 versions of it, the swing and the scalp reversal scout. And this is just so amazing, as it will be a great guide to you, all of these tools, as to which are the strongest and which of the weakest indexes, and which ones you want to choose to be on the long side or short side or both if you're a pair trader. Amazing tools that you see right over here. Let's look at the next screen, and you will see that what we have here is my turbo indicator. So what happens is that, let's say it's going up and it's green and telling you that, in this case, the QQQ is in an a period of upward energy. When the turbo goes on, energy is accelerating, and that really helps you expand your trade, improve your trade in both time and price. So you can stay in the trade longer, and of course that's the key, maximizing winning trades. Also, we've added all of these symbols in here for those that are day traders, scalpers in the individual stocks or important ETFs, and you can see how it shows up here, where it shows you whether or not it's positive or negative, or whether the turbo is on, and what the trade condition is based on that, based on my 8-minute strategy. Just amazing. And then a change log that shows you when everything is changing. Add to that, this is just beyond belief, we're recording the entire day. In other words, you can go back and look at these strategies. You can go back and review what happened during the whole day, and then you can see, as we've recorded everything, how you could have improved your approach to the market on that day. You can go back and review many days, because we'll be recording every single day. And this takes a shot of it every 5 minutes, and you can just move forward through the day and look at how these indicators are changing and how the trade strategy was changing and how it's trading around each of the support and resistances, and reconstruct the day and really learn so much of how you could have approached the day. And our new cockpit is something like you've never seen. If you're a day trader, look at this. Day Trader Cockpit, it has all of that information on one page. We're going to be zooming this to you. Yes, it's live all day long, and you'll get our full suite of trading indicators and planning tools for your active trading, day trading. You'll get the impulse monitor. You'll get the 8-minute trade condition. You'll see the charts that make up that 8-minute condition. It's just so informative in there. And right over here on the top, you can see that is our trade signal line in there, and that is so important. And then again, you get Matt's key chart grid there on the three indexes that you see there, and really gives you a fantastic idea putting all of this together as to what the conditions are of each of these indexes or the important key stocks that we have built in here all day, every day. There's no way that you can know more about the markets if you're a day trader than having the day trader cockpit. All of this, can you imagine? We're running a special right now, so lock in the introductory rate. First month 30% off, only $24.50. What that means is that, well, you can cancel it at any time, but it only upgrades at $34.95 a month, and you're going to lock in that introductory rate. And then the prices are going to go up, but not to you, because you're going to get these fantastic low prices. You want to learn more? Go to askSlim.com. Go to the top of the front page, click that Learn More button, or write to Matt at askSlim.com for more information. He'll be able to answer any questions that you have. This is the askSlim Day Trader Service 2.0. Nothing like this anywhere else. It's going to really raise your probability of success as an active trader in the market. Please do go to askSlim right now and subscribe. Stock market, S&P 500, SPY, multiple time frame analysis, and how will you know when a correction has started? Okay, so we're going to take a look at this analysis in the S&P 500. This is the SPY. On the left side is the weekly, on the right side is the daily. And we have been recently showing you the SPX, but I get a ton of questions on SPY. So today we're going to look at the SPY. Let's first look at the longer term analysis. This is actually the intermediate term analysis. And what we have in here are our cycle brackets on the bottom. If you're looking at this for the first time and you're brand new, on the bottom is a drawing tool that simply tells you that this is the analysis of the cycles if they were moving ideally. In other words, they go up half the time, they come down half the time. That's the ideal cycle. However, what happens is that they get skewed. In other words, when they're bullish, they peak later in the cycle, as you see here and going on right over here. When they're bearish, they peak early in the cycle, as you could see, and then they break key lows and they keep moving to the downside. Also, it's important to understand momentum conditions. And here you could see the momentum turning down right over there with our reversal scout. That is a level 4 tool that you can have. And that's important if you are interested in understanding the intermediate term analysis. We keep that on here. You can also use the slim ribbon. The upward turn right over here told us that the bottom was in place right there. And then we get into this period right over here where it's been rallying up that whole time, and you could see the strength. This minor cycle right over here brought almost no decline. You can see that here. It's the same thing that you saw over here when we have a swamped cycle. Swamp meaning this correction right over here couldn't really happen because this upward force was so strong. So you just get this sideways correction right in here. So now what happens is that usually when you get into the second half, when it's a very strong market, as you see right over here, it rallies for part of the time, and then what happens is it peaks, and then there's money flowing out in both of the cycles, and when you get that nesting or both of them pushing to the downside, you get the bigger corrections. And you can see that right in here in each of those areas where the yellow ovals are. Those are the periods of risk, and the market does fall. Our period of risk that we're showing in here begins sometime in late March and then goes all the way through potentially through May. So this looks to us like there will be a topping in here. Now this is right over there is the dominant 138.2% fib extension. That comes off of this whole bigger cycle right over here. And then there's the monthly right over there. That's the monthly 100% fib extension. And that gives us a target resistance area right over here that is around, let's call it just 520, something like that, and this level over here is 525. That's how those show up. Now, there are some higher ones up over there. We're not projecting there yet. That would be only if we got through these levels, and that's up at 537. So that's not a level that we're looking for right now. So this is really the resistant zone that we see in here, around 520 to around 525 there in the SPY. Now, once there's a topping in here, then we go into this corrective period, and the downside projections are right over here, which is around 475. That would be only about an 8% correction down to there, all the way down potentially to here, which is 451. And that would be about a 14% correction. So that would be pretty big. Remember, this one right over here was 10.9%. So it's pretty reasonable to expect that the 475 area will be tested in this correction. Though, you see this 23.6, that's 492. That would be acceptable if it pulled down to that level over there, but that would only be about a 5.5% correction. But that does happen in very strong markets. So that's what we would expect. We're also, you can see over here where these rising phases come in. Once there's a correction in here, which is a very strong likelihood, the market will very likely move to new highs again. And all along, no matter the timing of the corrective period, we believe that the market would be strong well into the later parts of 2024. So that doesn't change it. We're just looking for a correction right over here. So that's the looking at the intermediate weekly, and on the right side here is the daily chart. And let's just bring this up over here a little bit bigger. And you can see in here that there are 2 dominant cycles and 4 minor cycles that are showing. And what we do here is once the cycle is completely finished, then we show you the actual cycle lines. And while the cycle is in action, we kind of break that into what we call like a slim cloud, which is where you can see there's actually 2 channels in here, and the support resistance. It's important to note the slim ribbon, this is where it turned positive. Each of these minor cycles has had a positive slim ribbon. It's gotten support in the slim ribbon and then moved up again. Also, the slim ribbon PO on the bottom, a level 4 indicator, has continued to give you positive readings. When it's green, the slim ribbon is positive. When if you're using Thinkorswim, then the bars are all going to be green because it's positive. And each of these arrows tells you there are upside momentum resumptions. And you can see that in here. All of those fantastic pieces of information that you can use. And you would only have long side biases in here. There's no reason to be on the short side until the market tells you, even though we have discussed the corrective periods and the fact that there was resistances on this weekly chart that were lower than this. There has never been a point to sell the market or never been a point to short the market. Of course, you can always sell and take profits, but we have never said to short this market, and we won't until the market tells us to. Now, what will tell us to? Well, this cycle over here, and you can see if I point at it, that points out to May 20th where that ends. And if you look over here, this points out to around the middle of May. So this corrective period on the weekly aligns with the corrective period out over here in the daily. We expect that what's going to happen is that this next cycle out over here, which we don't have projected yet, will rally and then fail and break key levels. For the one we're in right now to break the key level where the market would likely turn down or give us that indication would mean that over this next week and a half or so it would have to sell off very hard. Getting under 496.50 would be the first warning, and then under 490.72 would be a breakdown and would tell us the correction had started. Once the next low is established in here, then we'll have new breakdown levels. But for right now, we're just looking for a pullback in here, and it's reasonable to get down to 507 to around 501 here in this next week and a half. This support right over here is 497 approximately, and below 497 would be a warning for the next cycle. Right now, we're just going to look for some modest pullback in here over this next week and a half into this third week of March, and then after that, we will be projecting again. Now, what will that projections look like? Well, I can just grab this right over here and show you that, well, it would be likely that from some support level, it would be moving up over here. We will have established another low important level, and then at some point it will be peaking in here and then turning lower out over here. And once it breaks the key low, this cycle here out into May is likely to be the one that has that much steeper correction. So I wanted to show you how I would be projecting that. Right now, everything is still positive. We're looking for modest pullback in the next week, week and a half, and then another rally as we start to form a top in here. This key area of resistance there around 520, and then right up over here around 527. So that's slightly higher number here than we see on that monthly fib extension, and this certainly could get up in there before we get into the failure that we expect and the significant selling that we see out over here potentially in the April and May period. So the actual bottom trough here, the synchronization between the daily and the weekly, comes out to around the third week of May. That's on this cycle here and on this cycle here, and we would expect to see that significant decline. I really think that it's reasonable to get down to about that 475 area that you see right over there from the area that we peak now at 518, and potentially even lower than that. That wouldn't be much of a correction, and it's reasonable to expect that in this market. That is a look at the stock market for this week. I hope that was great information for you. You've got to look at our day trader if you are an active trader. The new day trader service 2.0 is releasing this weekend. It will launch on Monday. And you go to askSlim.com to the top, click the Learn More button. It's got all the information there, and you're going to lock in the price of $34.95 a month, and we're going to give you we're going to give you a 30% off the first month, only $24.50. To give it a try. You don't like it, cancel it, but I think you're going to be absolutely amazed. This is the Trader Cockpit, and there's so much more to that. So go to the top of the askSlim website, askSlim.com, click Learn More, and see the information on this. So if you have any questions, write to Matt at askSlim.com. Make sure that you go to our website, get acquainted, sign up for free for the SIR Lite, subscribe to our channel here on YouTube, click this this video, thumbs up, give it a thumbs up, and you can follow us by clicking the bell on there, and you'll know when our videos are up there. And watch our videos in the playlists. On X, follow us at askSlim. And for any questions that you have, write to Matt at askSlim.com. That's it for this show. I want you to be so incredibly careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city.